Friends, welcome back to our channel Om Sai Bhojanapalli.
Insurance claims. Insurance is a contract between two parties called no blah blah. Because last class on the insurance, so we have to recap fully. Everybody? Or we will do at the end. Let us take up loss of profit. Claim for loss of profit. 8-step approach. Let us quickly recap the 8-step approach. Compensation period. In a fire insurance policy which is covering loss of profit, first we identify compensation period, which is indemnity period or reorganization period, whichever is less. Indemnity period means period covered by the insurance policy. Reorganization period means period affected by fire. Interruption period, any name you can call. So compensation period fixed. Now second step is short sales, because they will give us profit for the sales that we have lost. So we call it as short sales. So what is short sales? How to find out that? How to find out sales lost because of fire? I compare it with previous year. Sales during the corresponding compensation period of previous year plus or minus trend will give you expected sales minus actual sales will give you short sales. Simple comparison with previous year. What I would have made in the previous year and what increase or decrease I expect in the current year, accordingly I will fix my expectation. Though this is expected, out of that some portion of sales would have been already made, and thereby balance sales only we have lost. Correct? Yes, so then step number 3, gross profit ratio. Gross profit ratio equal to gross profit by sales into 100. Gross profit equal to net profit plus insurance standing charges. Okay. So then we had step number 4, GP on short sales. Short sales into gross profit ratio. Short sales into gross profit ratio. So that way we will be getting GP on short sales. This is what we are compensating. Even though we say GP is compensated, actually conceptually not GP, they are compensating two things. Net profit only they compensate plus some expenditure which are insured. You are insured for profit, you are insured for expenses. This is what we are compensating. We call it as gross profit. So then we have another compensation. Some of the expenditure or some expenditure which has never incurred in the past, which is not covered by insurance policy, which has been incurred only after fire, that too because of fire. That expense we call it as increased working expenses. This expense is also getting compensated because this expense is having some link to sales after fire period. This is expenditure made only to increase sales during fire affected period or after the fire period. Correct? So when you increase sales, definitely the short sales will reduce. You will avoid the reduction in sales, and thereby insurance company we have to pay only less amount. So insurance company will give claim even for the increased working expenses. Understood? Okay. But for that we can't tell whatever you spend I will compensate. There should be some ceiling. Correct? Such ceiling will be IWE into GP on AAT divided by GP on AAT plus. Actually it is nothing but what you should have insured and what is actually insured. First of all, understand, I expect you to insure for the annual profit. Rather than annual profit is annual net profit and annual expenditure. Correct? Then annual expenditure should be for the policy period, not that immediate 12 months and all. It should be for the policy period. But what is policy period? We don't know normally in a question. Understood? Policy period means it is from the date of policy taken for the another 12 months is what policy period. Everybody, we don't know normally the policy period. Respond. So when the fire have occurred on this date, definitely policy would have taken before that. Policy would have taken. So thereby only we are telling they should have insured up to that expenditure till the date of fire. Are you following? Everybody. Or that is not up to the date of fire. They would have taken policy at least one day before the date of. For another 12 months, they should have taken insurance policy. Could you appreciate that? So what we will do is, there is something called AAT. What I will do is, through AAT is that I will consider the period up to the date of, and I am projecting based on that for future. That is 12 months after fire. I am projecting the sales for 12 months after the fire. Could you appreciate that? Normally you are expected to take insurance for the policy period. If the policy was taken on 1st April, 1st April to 31st March, whatever profit expected to be earned, as well as whatever expenditure you have, further you should have taken insurance. Everybody. So your sales should have been considered for the April to March. But nobody, not necessary that all the business enterprise should take insurance policy exactly on 1st April. Different person take it on different data. I don't know which date they are taking insurance. Correct? But one thing I know, definitely it should have been at least one day before the fire. Following on thereby only we are telling that 12 months after the date of fire at least should have been insured. Could you appreciate that? Respond. And thereby we are supposed to project the 12 months after fire. We are supposed to project the 12 months, not actually before fire. We want to project the 12 months after fire. Are you following? But projection of 12 months after fire we can do only by considering the 12 months before fire and the trend. The projections of 12 months after fire can be made only by considering these two things. Which two things? The 12 months just before the fire and trend will give me the projections of 12 months exactly after fire, for which you should have taken insurance. Correct? That is what GP on AAT divided by GP on AAT plus uninsured standing charge. Because why that proportion is coming? Because I tried, once again I am trying. If you don't know, it's okay, you remember the formula only. Correct? I told you that by taking GP and AAT, you are having net profit and insured standing charge. Correct? Also include uninsured standing charge. Everybody. Now, if forget about this extra expenditure, respond. Yes, now, when you are taking insurance itself, you are actually supposed to take insurance for net profit and all the fixed costs. Yes, but even when the fixed costs are known, but still you would have insured only few amount only. Correct? Yes. So thereby you should have insured for net profit and all standing charges, but you insured only few amount. Correct? Yes. So what should have insured and what you actually insured, in that proportion only I will give even your extra expenditure. Yes. Extra expenditure I will give. Correct? Yes. So why, first of all, this is not insured? Now I was not knowing about this expenditure, thereby I have not insured this expenditure. Correct? Yes, but then I will ask you a question. If you know, you will insure fully. Yeah. See the evidence that this much expenditure was there, but you insure only this much. Correct? So in that proportion only I will give you the new expenditure also. That is the concept behind the first formula. Everybody. So IWE into GP on AAT is what actually you insure divided by GP on AAT plus uninsured standing charge. Could you appreciate that? Second is what? GP on RETA. Why that computation is made means, RETA is actually nothing but the sales made, extra sales made because of extra expenditure. If you make extra sales, then to that extent compensation will be reduced from insurance company side. Correct? Yes, everybody. So that is a maximum benefit that comes to insurance company. Everybody, what is the maximum benefit? Now, the profit relating to the extra sales is the maximum benefit to insurance company. What is the maximum benefit to insurance company? Profit relating to the extra sales. The more you make sales, to that extent claim will reduce. If you are not making sales, you are losing sales. So if you are losing sales, I have to compensate it. Correct? Not sales amount, but profit amount. Correct? So thereby, if by making sales, you are giving me savings. Correct? What savings you are giving me? The profit on the extra sales you are making. That savings you are giving me. Yeah. So that is what we are going to take it as a second ceiling. Correct? One is proportion computation. The other one is the GP and RETA. That is profit on reduction in turnover avoided. What is that concept in a layman's understanding? Additional sales attributable to additional expenditure. What is the logic behind taking that formula? Because that is the maximum benefit to insurance company. Why? First of all, I am giving this expenditure to you because I am getting benefit. I don't have otherwise no obligation to pay you that amount, correct? You are insured for the profit and standing charges, not for this expenditure and all. Why I should give this expenditure? I am getting benefits. First of all, you should know that. Who is getting benefit? But maximum I should compensate only to the extent of maximum benefit I get. So thereby only we are telling your expenditure is maybe 80,000. How much? 80,000. For earning a profit of 60,000, you may have spent 80,000. Maybe possible, correct? But I can't spend that 80,000. I can give you only maximum 60,000. Correct? Everybody, that is the point you should be knowing. So one is one proportionate concept. The other one is that GP on reduction in turnover. Third one, actual expenditure is considered only because out of these two, one you are not computing. And suddenly you find that the claim is much more than the actual expenditure. Never the claim can be more than what? Actual expenditure. Understood? Everybody. So thereby least of the three. What are the least of the three? Once again, IWE into GP on AAT by GP on AAT plus uninsured standing charges. Then GP on RETA. Then actual expenditure, correct? Okay, AAT means AT plus or minus trend. AT means annual turnover. Annual turnover means sales during 12 months. Immediately preceding immediately preceding the date of hire. That's the annual turnover plus or minus trend will give you adjusted annual turnover, correct? So then adjusted annual turnover into GPR will give you GPR AAT. Clear? Okay. Step number 5 is actually GP on AAT. Step 6 is IWE. Step 7 gross claim. Short sales plus IWE, claim for IWE minus savings and expenses plus firefighting expenses. Correct? Then we should see average class applicable. Average class is applicable if it is underinsured. Underinsurance refers to policy amount less than GP on AAT. So policy amount less than GP on AAT. Listen. So this policy amount less than GP on is what we call it as underinsured. If underinsurance is applicable, gross claim into policy amount divided by GP on AAT. Like that only we discussed. We saw different issues in relation to computation of ratio. GP equal to net profit plus insured standing charge. It could be net loss also possible, correct? Net loss also it is shown as negative plus standing charges, insured standing charge, you will get gross profit, correct? Suppose you are getting gross loss, then definitely no claim will be made. If there is gross loss means net loss possible, but gross loss not possible, correct? Gross loss is there, it means that your business doesn't have the ability to recover even expenses. Even if the fire is not occurring, you will lose expenses, correct? So thereby we will not be compensating any amount if there is dash loss. Could you appreciate that? So anyway, that scenario and all, academic wise it will not be given, practically it may be possible. Could you appreciate that? These are the things. Compensation period 1st September to 1st February. Date, year wise nothing is mentioned. Yes, sir. Short sales. Standard sales given 2,25,000. Trend is given at 10%, thereby it is 2,47,500. Actual sales 67,500, thereby short sales was 1,80,000. GPR, net profit plus insured standing charge 36,000, 72,000, 1,08,000. GPR equal to 1,08,000 by 6 lakhs into 100, you are getting 18%. This is actually 18% is the GPR of which year? Previous year. Now, if no information given previous year GPR, we will assume it as current year GPR. But there is an increasing trend for GPR by. So thereby GPR is to be taken at 20%. So GP on short sales equal to 1,80,000 short sales into 20% will give you 36,000. Right? I hope you have completed. Be checking your notebook. GP on AAT, annual turnover 6,60,000. Trend 66,000, total 7,26,000. Then it is GP and AAT 7,26,000 to 20%, 1,45,200. Claim for IWE. IWE into GP and AAT by GP and AAT plus uninsured standing charge. So 12,000 is the expenditure into 145,200 by 145,200 plus 6,000. We got 11,254. 11,524. GP and RETA. So it has been understand that they given breakup or RETA we given. So in the question then there is no breakup required, no computations required. Don't think that there is, sir, I have difficult in computation of RETA and all. What is given is RETA. Reduction in turnover avoided through increased cost of working. How much? Some student was having a doubt, sir, here also increased cost of working given, here also increased cost of working given, confusing and all. If you see in isolated basis, then you will think it is expenditure. It is not like that. Read the statement properly. Reduction in turnover avoided through increase in working expenditure is rupees 30,000, which means they are telling about the RETA. Understood? This is what increased working expenditure, which is 12,000. So RETA is given in the question as 30,000. Into 20%, it is 6,000 and actual IW is 12,000. So you take what? GP and RETA, which is 6,000 rupees. Then gross claim 36,000, GP on short sales 6,000, savings in insured standing charge 4,500. You are getting 37,000. Policy amount is 1,08,900. Is less than 1,08,900. GP and AAT 1,45,000. Average clause is applicable. So net claim equal to gross claim into policy amount divided by GP and AAT. So 37,500 into 1,08,900 by 1,45,200. You are getting 28,125. So it's very good that most of you are writing in a very good way. Your writing has improved. You are not having the laziness now. Writing each and every aspect. That's very good. I hope the same way you all written. No shortcuts in writing. Whereas question number 25.
Major Limited give the following trading and profit and loss account for the year ended 31st December 2014. Trading profit and loss account for the year ended 31st December 2014.
14.
2 opening stock 50,000, 2 purchases 3 lakhs, 2 wages rupees 20,000 for skilled labor 1,60,000, 2 manufacturing expenses 1,20,000, 2 gross profit 2,40,000, 2 office buy sales 8 lakhs, buy closing stock 70,000. 2 office administrative expenses 60,000, 2 advertising 20,000, 2 selling expenses fixed 40,000, 2 commission on sales 48,000, 2 carriage outward 16,000, by net profit 56,000. The company had taken out policies both against loss of stock and against loss of profit. The accounts being 80,000 and rupees 1,72,000. A fire occurred on 1st May 2014 and as a result of which sales were seriously affected for a period of 4 months. You are given the following further information. A. Purchases, wages and other manufacturing expenses for the first 4 months of 2014 were 1,50,000 and 36,000 respectively. Sales for the same period were 2,40,000. Other sales figures were as follows. From 1st January 2013 to 30th April 2013, 3 lakhs. From 1st May 2013 to 31st August 2013, 3,60,000. From 1st May 2014 to 31st August 2014, 60,000.
No, wait, actually it is 2013 only. I'm sorry. Cheating illapa.
Due to rise in wages, gross profit during 2014 was expected to decline by 2% on sales. Additional expenses incurred during the period after fire amounted to rupees 1,40,000. The amount of policy included rupees 1,20,000 for expenses leaving rupees 20,000 uncovered. Ascertain the claim for stock and for loss of profit. All workings should form part of your answer.
The question involves loss of stock as well as loss of profit. 4 plus 8 steps, total 12 steps. Separate policy has been given for separate loss. Loss of stock is separately insured for 80,000. Loss of profit is separately insured for 1,72,000. It's not a single policy giving both different policy. Correct? Okay. Fire occurred on 1st of May 2014. They are following calendar year. So the previous year is 2013 and fire occurred on 1st of May 2014. Correct? Everybody?
Yes, sir.
The first claim for loss of stock. Step number 1. Gross profit ratio. We will find a gross profit ratio which year? Previous year. Correct? So previous year gross profit ratio we will be computing. It is given in the question that previous year gross profit. For gross profit ratio not given, we will prepare trading account of previous year. But trading account given, but ratio not given, but gross profit is available. Now should we take the gross profit which is available in trading account or net profit plus insured standing charges? Is it net profit plus insured or available in trading account? Available in trading account only. So then we only told net profit plus insured. That is loss of profit policy. Understood? Now you should not confuse. For better clarity only we have added both the aspects in the same problem. So for loss of stock, when I apply gross profit ratio, it is not based on net profit and insured standing charge. It is based on the balancing figure in the trading account. Correct? So how much is the gross profit? What is the sales? So 2,40,000 by 8 lakhs into 100, we get 30%. Everybody, then there is an information given. What information means? Due to rise in wages, gross profit during 2014 was expected to decline by 2% on sales. Correct? So which means we will be having a reduction. 2% on sales means it is a rate on sales. Correct? Gross profit ratio means it is ratio on sales. So 30% minus 2%, you will be getting revised gross profit ratio as 28%. Understood? Respond. Second, preparation of memorandum with 2 column, normal goods and only 1 column. Correct? So we prepare normal goods, abnormal goods only when information about abnormal goods present. Just prepare memorandum trading account. Everybody. And then find out stock on the date of. Do we have salvage value anywhere given? See, anywhere salvage value given? No, salvage value not given. So thereby there is no salvage value. If there is no salvage value, I told you there is no need for referring average class or not. Claim will be policy amount or loss of stock, whichever is less. Stock on the date of fire, whichever is less. Understood? Everybody. That way we can find out. Then we will go with 8 steps. Correct? Compensation period. So is there any indemnity period mentioned? So there is no need for compensation period. Directly go for short sales. Respond. Then we have gross profit ratio. Once again you should find a gross profit ratio separately. Yes, then GP on short sales. Accordingly we will proceed with the steps. Understood? I am not discussing many things here. I am just gave you a hint or how to proceed. Now you will proceed. Silently please try. Gross profit ratio. You're solving? Okay, so which means whoever is solving, please keep solving. But no discussion. Of 2013, gross profit by sales into 100, that is 2,40,000 by 8 lakhs into 100, 30% minus decline. What happened in 2014 means wages increased. So profit at 2% of sales, which means profit itself is a rate on sales only, correct? It gets declined by 2%. This 30% is the profit on sales. So in that there is a decline by 2% because of wages got increased. This will become 28%. Now stock on the date of hire. We have opening stock. To opening stock. How much? 70,000. To purchases. 1 lakh. To wages. 50,000. By sales. 2 lakh. To carriage is there. Manufacturing expenses. To gross profit. 2,40,000 into 28% by closing stock. Stock on date of hire. 83. Up to this you would have completed correctly? Yes, sir. Everybody? Yes, sir. Okay. Next, stock on the date of hire. 83,200 minus nil equal to 83,200 is the loss of stock. We know loss of stock is 83,200. Our policy amount rupees 80,000, whichever is less. Therefore, claim equal to rupees 80,000. Even if you apply average class, then also you will get the same answer. You say that, sir, average class applicable, and you apply that, you will be getting 80,000 as claim. How many of you got this? Almost everybody. Very good. So out of 16 marks now, you got 6 marks. That's very good. All of 100% of the students getting 6 marks. Now we'll see whether remaining 10 marks we can get or not. There is no need for separately computing compensation period. Fire occurred on what date? 1st of May. And business was affected up to? For a span of 4 months. Very clearly given. Correct? Is it given? The business has been affected seriously for a period of 4 months. During this 4 months, since my business is affected, I am losing profit. I lose profit because I am losing sales. So I should know how much sales I am losing. Correct? I always normally compare it with the previous year same 4 months, and I will project how much sales I have lost. Everybody, but not necessary that all the years I expect same sales. Their sales may be increasing or sales may be decreasing. Understood? If there is no information about that increasing, decreasing given, we will not consider such increase or decrease. Trend will be ignored. Could you appreciate? Yes, everybody? Yes, sir. There were questions. When we did the very first question, can you take up the maybe the third question in loss of profit? That is 16, 17, 18th question. Question. Answer vanda. Question. 18th question. Question number 18. Correct? Question number 18. La expressive given, there was no trend. Is it given? In question number 18, separate point here only given. No clause for upward or downward trend. Correct? Respond. Yes, sir. Sorry. Question number 19. 18 no, it was given in the question that there was no trend. Correct? Yes, in question number 18, it was given in the question that there was no trend. Question number 19. Trend was given at, so we apply trend. Correct? Question number 18 said no trend, thereby no trend. Question number 19 says there was trend for 15%. Correct? Next question number 20. Trend was given as 25%. Everybody? Yes, then question number 21. Trend was 15%. Everybody? Yes, then question number 22. 10%. Everybody? Yes, suppose nothing was mentioned. No increase or decrease in trend. Correct? Now listen carefully. Through this question, we are going to see one more item. Calculation of trend. Please understand. If sales of comparable period is given, sales of previous year and current year comparable period given, using which we will estimate the trend. Because what is the basis in which we are telling insurance company we have lost this much? Previous year sales is the sales I would have made in this current year. Correct? In the same period, the same sales will be made in the current year. Could you appreciate that? Yes, if you look into this question, they have given first 4 months sales of 2013. Can you see that question? First 4 months of 2013 given how much? 3 lakhs. First 4 months sales of 2013 is given how much? 3 lakhs. Everybody? Yes, okay. Now listen. Pakka? Yes, sir. Everybody? Yes, sir. Okay. So we are given with the information. First 4 months sales of 2013. How much is that? 3 lakhs. Now first 4 months sales of 2014 is given. 2 lakh? If you say that previous year sales will be the current year sales, which means sales should have been minimum 3 lakhs. Correct? In 2013, first 4 months, the sale was 3 lakhs. Correct? In the current year, the sale was 2,40,000. Correct? Please respond. Yes, now, this reduction, is it because of fire? Is it a period affected by fire or not affected by fire? Fire came after this only. So, which means even before fire, the sales is not matching. Correct? Yes, that shows that there is decline in business. There is, and this decline should be expressed as a percentage, and we will say that this is declining trend. This is declining trend. Could you appreciate that? Sir, then why we are not doing in other problems and all? Like this comparable sales not given means you can't consider trend. Correct? Within a year, second month to third month to 4 months, we don't find trend. Correct? Some previous year period as well as current year comparable period given, then we'll estimate trend. If it were any other question, if I don't have this information about 3 lakhs, if I don't have information about, then I will assume no trend. Then I will assume no trend. Are you following? Please respond. So that's a point you should be knowing. If that point is not there, then definitely we'll assume that there is no trend. But here 3 lakhs is given, 2,40,000 is given, comparable period, both are 4 months of previous year and current year respectively, and thereby there is trend, there is declining trend to the extent of 20%. How much? So that should be considered in your short sales. And thereby the first thing should be computation of trend in this question. Understood? So through this question, we should be learning something new. Don't think I didn't get the answer and all. Don't worry, because you are not aware of such concept. I didn't teach you only. Understood? So after lots of thoughts that you are just already made, now if you are receiving the answer, never you will forget. So when the trend is not given, And if they are mentioned in the problem, no trend clause is there, then you can easily proceed without trend, correct? Trend not given. It is also mentioned that there is no trend, then you can move into the problem without trend, correct? Respond. Trend is not given, but the problem is silent whether trend is there or not. Then what do you do? See whether comparable period is given or not. If the comparable period is given, compute trend. Otherwise, make a note assumption that trend is ignored. Are you following? So once again, I am just giving you different circumstances of the problems. Practice is different, problems are different, correct? In problem specifically given some trend. Apply the trend. Respond, some trend is specifically given, then apply the trend. Everybody, trend is not given, as well as information is there that there is no trend. Then there is, even if there is comparable sales, no trend only. Are you following? Even if there is comparable sales, there is no, because question tells that there is no trend, correct? Yes, sir. Sorry. No trend amount given or rate given. Question is silent whether trend is there or not. Then what I should do? See whether comparable sales is given or not given. Are you following? Yes, everybody? Yes, now once again. Sir, if you have comparable basis for 12 months as well as comparable basis for 3 months and 4 months, then I should take comparable base only for 12 months, not for 3 months, correct? Trend is normally considered from year to year, not period to period. Generally trend to be considered for year to year, not for period to period. Could you appreciate that? So if I have last 2013 sales that can be compared with 2014, then trend will be based on that year to year basis, not period to period. Here I don't have year to year, correct? I don't have the entire sales of 2014. I have only the entire sales of 2013. So I am just going for year, period to period, correct? So based on the period to period, identify the trend and you should be applying. Could you appreciate that? Yes, respond. Yes, sir, I don't have comparable basis. Then you provide a note that there is no trend. Are you following up? Once again, specific trend is given. Then apply the trend. No trend given, but question also telling that there is no trend. No trend, correct? So question doesn't give any trend information. Question is completely silent. See any comparable periods are there. If there is comparable period, find out trend. Otherwise, no trend. Understood? These are the basics. Now, in this problem, do you have comparable period? So we have comparable period, correct? So we have comparable period. So what is the comparable period? First 4 months of 2013 and first 4 months of 2014. So from 3 lakhs, the sales was reduced to 2,40,000. There is a reduction by 60,000. That 60,000 as a percentage of 3 lakhs or 2,40,000? 3 lakhs. 3 lakhs it was reduced by 60,000. About percentage declining trend, how much? 20%. Understood? Everybody? I will like to apply that in the question. Then only we can get the answer. Sales during 1/1/2013 to 34/2013. How much? 3 lakhs. Sales during 1/1/14 to 34/2014. 2,40,000. Decline. How much? 60,000. decline is 60,000. Next, we have declining trend. $60,000 is a reduction from 3 lakhs. So percentage will be 20%. Next, we will go for short sales. Many new things that you are going to learn through this question. So don't worry that we are learning new things and all. So, sir, I need to strike all these things, don't worry. Some of you would have done, some of you striking, let that striking be there. Don't try to do lots of overwriting. Short sales. Sales for the period 1/5/2013 to 31/8/2013. How much? 3,60,000. Do I expect same sales in the current year? No. So thereby minus trend, declining trend. So minus at 20%. $2 lakh minus actual sales. $2,28,000. Step number 3. Gross profit equal to net profit plus insured standing charges. Everybody? Additional expenses incurred during the period after fire amounted to rupees 1,40,000. Another confusing statement or another place where students get confused. Additional expenses incurred during the period after fire amounts to 1,40,000 is what information, sir? IWE 1,40,000. That's okay, sir. Problem is not that. The amount of policy included rupees 1,20,000 for expenses, leaving rupees 20,000 uncovered. Very good. This is nothing but the expenses about what is insured and what is uninsured. And this is not the breakup of this 140. Unfortunately, that 140, this 120, 20 is having some matching totals, correct? But no way it is related to each other. 140 is the total expense incurred after fire or before fire? And this 120 and 20 are expense are used to incur before fire as well as incurred after fire, correct?
Yes, sir.
Everybody. Yes. So please understand that. So no way there is a relation between the first line of point E and the second line of point E. Could you appreciate that? Yes. So additional expenses incurred after fire came to 1,40,000. Then amount of policy include rupees 1,20,000 for expenses, which means it is insured, and 20,000 is uninsured. That is the point that they have communicated. Could you appreciate that? So, and they are all the expenses in which comes in P&L fixed, and normally only P&L expenditure are fixed. Sometimes trading expenditure can also be fixed. Understood?
Yes, sir.
And thereby only this 1,40,000 is a total expenditure. Respond. This 1,40,000 maybe. In fact, we need not analyze such things, but just for normal knowledge only, it is like this. This is normally variable. Everybody, commission is, these three are normally fixed. 60, 20 and 40, 120, correct? And maybe this 20,000 for skilled labor. 20,000 for some administrative, maybe some engineers, whatever you pay, maybe also be fixed, and that way total fixed amount so much? 1,40,000. It may be relating to manufacturing, correct? But it may also be fixed, so thereby please understand that. So total overheads may be 1,40,000, which are fixed cost. Could you appreciate that? Standing charges means, fixed cost. Are you following? Usually I told P&L account items are fixed, correct? P&L can have variable. Trading can have also fixed cost. Trading usually variable, P&L usually fixed. P&L can have, trading can have fixed. Are you following? Anyway, these things are not the basis on which you are deciding insured this much, uninsured this much. It was very clearly given in the question, what is insured and what is uninsured. What is insured? 1,20,000 covered by policy. What is uninsured? 20,000. Leaving out 20,000, uninsured. Understood? These are the points you should be knowing. Right? Okay. So which means net profit, how much? 56,000. 1 lakh. So gross profit ratio of 2013, 1,76,000 by 8 lakhs. How much? 22. Less decline. Decline is there for both. Decline by 2%. This is 20%. Everybody. Next we have GP on short sales. GP on short sales will be, short sales into GPR, that is 2 lakh. Can I turn this page? Say various twists and turns in this problem. So far not completed. Some more twist is there. Step number 5. GP on AAT. AAT means annual turnover plus or minus trend. We know trend. Everybody? We want annual turnover. Annual turnover means sales during 12 months immediately preceding the date of hire. Usually will be given in the question. But in this problem, annual turnover not given. Fire occurred on, if you see the problem, fire occurred on, fire date was 1/5/2014. So we want the sales from 1/5/2013 to 30/4/2014. We want 12 months from 1/5/2013 to 30/4/2014, correct? If you closely analyze this period, this will have actually 8 months of 2013 and 4 months of 2014. Understood? So we have 12 months till the date of hire is what we want, correct? Which will have 8 months of 2013 and 4 months of 2014. Clear? Everybody? Now proceeding further. Now what we understand is that this 4 months of 2014 was given. Correct? It was given how much? 2,40,000. I want 8 months of 2013. But then how to find out 8 months? They have given 12 months sales of 2013. They have given sales of 12 months in relation to 2013. Correct? Very easy. 12 months sales divided by 12 into 8. Like that we can't do. Because you can do like that, provided there is an assumption that you satisfy. What assumption? Sales were evenly earned throughout the period. Sales were evenly earned throughout the period, but that is not the case. So then how I can do? I know first 4 months of 2013 separately. First 12 months minus first 4 months will give last 8 months. First 12 months minus first 4 months will give you last 8 months of 2013 and 4 months of 2014 together only that 80 will come, correct? So that way only we will be trying. So shall we? Now listen. Sales for the period 1/5/2013 to 30/4/2014. Which is 8 months of 2013, 4 months of 2014. What is this amount? 2,40,000. Everybody? Yes, and this what is this amount? How? 8 lakhs minus 3 lakhs. 8 lakhs minus 3 lakhs. Everybody? Okay, super. Now we got 12 months sales. We'll apply trend. Plus trend. Ayyo. Sorry. Minus trend at 20%. There is another twist. The twist is that we are not applying trend on this. Because the sale is already trend adjusted. Only based on the reduction from 3 lakhs to 2,40,000 only we found out the trend. From 2013 the sale of 3 lakhs getting reduced to 2,40,000. So the trend is already considered in the figure of 2,40,000, correct? This sale is reduced sales or the normal sales which we have to reduce? Is it reduced sales or normal sale from which we should apply the trend? It is already reduced. This is already trend adjusted. Based on this 240 only we found out trend, correct? So there is no need for once again applying trend on the sales which is already trend adjusted. Usually when we take up annual turnover, in all the question, not only in this question, in all the question we will have a greater portion of sales relating to previous year, some portion of sales relating to current year. You should know one thing, current period sales is already trend adjusted. Current period sales is already, sir, in that case then all the problem what you have done is wrong. Correct? Please respond. Why is wrong? Because all those questions had annual turnover, some portion of previous year and Some portion of, but we apply trend on the 12-month sales. Understood? Now, actually for academics, we make it as a very short form only. If the sale breakup is given, then we will apply trend only on the previous year sales. If the sale breakup is given, we'll apply the trend only on previous year sales. If this breakup is not available, they have given annual turnover without any breakup now, then you don't try to break up by assuming that it was even. You can't assume that it was even. Anyway, current year is less significant portion, and thereby we'll be applying trend on the entire sales without breakup. Correct? So in all those problems, we didn't have the breakup of what is relating to previous year and what is relating to this 12 months only. We are having a breakup of 8 months of previous year and 4 months of current year. In this problem, we will ensure that trend is not adjusted on 2,40,000. Trend is adjusted only on 5 lakhs, and thereby what is the amount we are getting? It is 4 lakhs and 2,40,000. Could you appreciate that? Please respond. And that way we are getting an amount of 6,40,000. Everybody, now listen. So then you will be tempted with another shortcut here. Sir, this difficulty and all you are making. I got a shortcut, sir. What shortcut, pa? Last year sales 8 lakhs, sir. 8 lakhs minus 20%, 6,40,000. Correct only. But then, if the breakup is not given, don't apply previous year sales into the trend and all. You should apply the trend of the annual turnover only. You should apply the trend, not on the previous year sales. Could you appreciate that? So, by getting 6,40,000, people when they play with numbers, they can easily develop relationship with the numbers. Correct? Everybody. Say so easily you can develop relationship with figures and numbers. Correct? Numbers. So you will relate, this number, that number, okay, fine. So that sort of relationship you don't build, sometimes the relationship is illegal. That is not a proper acceptable relationship. Could you appreciate that? So thereby, only when such breakup is available, please apply this way. Otherwise, you will apply on the entire 12-month sales trend. Correct? Which means don't think whatever you have done is wrong and all, it is perfectly okay because there was no breakup information given. Understood? Everybody? Now proceeding, it is GP on AAT. Highly an exceptional question, but the question had come twice in the examination. This time will come or not, I don't know. 6,40,000 into 20%. That was the last twist, no other twist we have. Now claim for we have IWE into GP on AAT, GP on AAT. So IWE is 1 lakh into 1 lakh, 1 lakh. Oh, okay. GP and Rita, since no information given, we assume the entire sales was possible because of the expenditure. Entire sales will be assumed as Rita, correct? So, 60,000 into 20%. Least of the above, that is 12,000. gross claim, GP on short sales, how much? 40. Then IWE, savings in insured standing charge, right. Then we have a net claim, policy amount of rupees 1,70,000 is higher than GP on, therefore average class is not applicable. So net claim equal to gross claim, that is 57,000. That's all. Claim. Computation of insurable amounts. So we actually insure net profit and standing charges. We expect some net profit in future. That net profit plus whatever fixed cost, all these things we will insure, correct? Everybody? So when we take a policy, through that policy what we cover is that profit expected to be earned from the date of the policy. Profit expected to be earned from the date of such policy plus various standing charges. But without going into future, we can't find out the net profit and other things. So thereby the base will be last year. The previous year will be the base for taking future policy, correct? Everybody, because care should be taken that we are not under insuring. We are always at par or maybe over insuring, but never we should under insure. Clear? So what we need to understand is that we need to identify the net profit and standing charges of current year. And this we together call it as what? Gross profit. This need not be the correct gross profit which you arrive in a trading account, because you may also have variable cost which we don't insure. We insure only fixed cost. Correct? Respond. Okay. So what do we do is we will identify net profit and standing charges of current year, which we call it as gross profit. Understood? There are two ways you can express yourself, but both should lead to same answer only. Now you can find out gross profit ratio of current year. Gross profit ratio of, which is gross profit by sales into 100. You get gross profit ratio? Please respond. Now what do we do is we will project the sales of future. We will project the sales of future. And then based on the projected sales, we will apply the gross profit ratio is what we should insure. Very simple. Correct? Based on the projected sales into this gross profit ratio is what we should insure. Suppose, sir, why you are taking previous year expense, you should take current year expense. So please understand, in the absence of information, standing charges remains constant from year to year. Would you appreciate that? Please respond. So thereby, this is the rate that you are earning on sales, and that same amount you will be ensuring that will be there in future also. Could you appreciate that? Based on the projected sales, you may get more net profit. On the projected sales, you may get, sir, otherwise you may say, sir, this amount you can insure. No, we can't insure for this amount. This is the net profit and standing charges of current period. Correct? Now, when the sale is increasing, what happens? Gross profit will increase, standing charge remains the same, net profit will increase. Could you appreciate? So simple computation of insurable amount is very simple. Future sales into gross profit ratio, correct? Everybody. In the absence of information, gross profit ratio remains same from year to year. In the absence of information, gross profit ratio remains same from never. Net profit ratio will be same. Never. Even 1 rupee sale is increasing, then net profit ratio is different, correct? Yes, sir. Because what we understand is fixed cost remains and net profit will increase. Could you appreciate that? These are the points. So thereby what do we do? How to project or how to take the insurable amount? Insurable amount is very simple. Future sales into GPR is the insurable amount, correct? Yes, respond. Yes, GPR will be computed based on current year. Yes, everybody. And then we will project the sales of future. We will project the sales of future. Understood? This is how we will find out the insurable. Or in a simple way, what you can do is, if the projection is made in such a way that sales are expected to increase by 25%. Sales are expected to increase by 25%. What you can do directly is current year net profit plus standing charges. Respond. Plus 25% directly. Plus 25% directly. You need not find out sales, then on sales increase by 25%, then apply GPR. You will get same answer here. What is that? Net profit plus standing charge. That amount has increased by 25%. Understood? Please respond. So there is a direct link between gross profit amount and sales amount. Everybody? Gross profit will directly vary. It is directly proportional to sales. Understood? If sales increase by 25%, then gross profit ratio doesn't increase, but gross profit amount increases, correct? So thereby either way you can find out, either net profit plus. If they don't give like this information that project future sales increase by 25% and all, instead they are giving directly future sales. Directly giving, then better what do you do? Find out gross profit ratio, then project the future sales given that sales into gross profit ratio. You will be getting the amount of the amount to be insured. Could you appreciate that? So insurable amount is very simple to compute, sir. It is projected sales of future. That is future after the policy, correct? So that amount sales into gross profit ratio. Could you appreciate that? Please respond. The projected sales can be an ad hoc estimation amount, or it could be a percentage based on the current year sales. It could be an ad hoc amount, or it could be a percentage based on the current year sales. And if it is based on an ad hoc amount, then you should apply that ad hoc amount. Ad hoc amount is lump or amount, correct? That amount into gross profit ratio. What you computed based on the current year information. Everybody. After finding this, plus any increase in standing charges. Plus any increase in standing charge, because what you are just insured is only based on the current year standing charges, correct? And usually we assume what standing charge from 1 year to another year remains what? Same. So if standing charge is increasing, that amount has to be separately added to the net profit and standing charges of the future year what you have projected. Could you appreciate that? So once again, what is to be insured? Now we are just rechanging or retuning. It is this way: sales into which is sales? Past sales, future sales into plus increase in standing charge. Those expenditure which are not incurred in the past, but which are incurred to incur in future, not during fire and all. Even without fire also we are going to incur extra expenditure, correct? We are going to have extra borrowing, we are going to have extra salaries, extra rent. That amount should be considered separately. Could you appreciate that? Respond. Yes, so that shouldn't be considered in considering the ratio for the current year, previous year, correct? Because that was not an expenditure incurred in the previous year. That is going to be incurred in the next year. So thereby, based on the current year, work out the percentage, apply the percentage on the future sales. You will get some amount plus increase in standing charge is the amount to be insured. Are you following? Sir, please understand that it is net profit plus standing charges of. Now it is this way: GP of subsequent year future period, future year will be projected sales. Projected sales into GPR. Correct? Respond. Plus increase in standing charges. You will get what? Insurable. If the projection is made as a percentage of current year sales, I repeat. If the projection is made as a percentage of, then how I can work out? It is net profit plus, don't find out sales and all. Net profit plus standing charges are plus the percentage. Percentage increase in sales will be applied directly on percentage increase in net profit and standing charges. Correct? Then plus increase in standing charges. That you have to do. Are you following? Increase in standing charge, anyway you have to do. Could you appreciate that? Everybody, these are the points you should be knowing. So for computation of what amount? Insurable. So we have got two questions. One is a question that has been there in practice manual. Another one which has appeared in RTB, never came in the examination. Every chance it can come in the examination. Very quickly we like to knock it off. A very simple, smaller area. Correct? Yes, sir. Respond. Yes, sir. Fine. 3 questions pending. All the 3 we have to try. Question number 24. Highly relevant in the month of April. Question number 24, page number 12. IPL wants to take up a loss of profit policy. Turnover during the current year is expected to increase by 20%. Aha, super. The company will avail overdraft facility from its bank at 15% interest to boost up the sales. The average daily overdraft balance will be around 3 lakhs. All other fixed expenses will remain the same. The following further details are also available from the previous year account. Total variable expenses, total fixed expenses, miscellaneous income, net profit. Determine the amount of policy to be taken for the current year. If you go with trading and P&L account, sales variable cost, which means cost of goods sold, GP, fixed cost, miscellaneous income, net profit. Do you accept this statement? Sales, cost of goods sold, we will get gross profit plus miscellaneous income minus various indirect expenditure, fixed expenses, you get net profit. We agree this? Okay. Let me fill whatever information given. Okay, 420. Variable cost I know la. Okay. Now tell me, can I find out gross profit? Gross profit plus income minus these two will minus fixed cost, I will get net profit. Now what is gross profit? 8,50,000. Everybody? So gross profit is actually 8,50,000. Understood? Everybody? Okay. What is sales? 32 lakh. Sales is 32 lakh 50. Understood? Now listen carefully. Not necessary you should find out sales and all, but chumma we are finding sales. You should know that miscellaneous income, what I show here is actually what income? Miscellaneous income. Interest, dividend, rent or commission, correct? Respond. When I say, when I insure my net profit, the net profit includes some miscellaneous income also, which we will not insure. We will not insure miscellaneous income. We will insure our operational income, not miscellaneous income like interest, dividend, correct? Why sir you won't insure? Because please understand, I have deposited some money at bank, correct? Every year I will get interest. Will that be affected by fire? No. Clear? Respond. I have put some money in shares. I used to get dividend income. Will that be affected by fire? No. So generally miscellaneous income is not going to be affected by, and that will not be insured, correct? Everybody. So it's an operational income which has to be insured. So I need not go up to this much. I could have worked out very easily. What I should understand is, in this net profit 4,20,000, miscellaneous income included or not included? In this 4,20,000, miscellaneous income included or not included? Included. Actually 850 plus 70 minus 5 lakhs only, you got 420. So 420 includes 70 or not? So includes a respond. Exclude it. How much? So 3,50,000 plus 5 lakhs is the insurable amount, correct? 5 lakhs is the standing charges. Please respond. 3,50,000 is the net profit from business operation. So totally 8,50,000 is the insurable amount. Clear? Sales going to be increased by? Sales will increase by 20%. Sales will increase by, to that extent this GP also will increase. 8,50,000 into 20% is the increase. How much? 10,20,000 is the amount I have to insure if there was no any other increase in expenditure. But I find that in future I am going to have an overdraft for 3 lakhs, for which I will pay interest at the rate of 15%. Is it fixed cost or variable cost? Fixed cost. So that should be considered as an insurable amount only. So 10,20,000 plus 45,000, 10,65,000. Correct? So without finding sales, what we can do is, this 4,20,000 includes what income? Miscellaneous income. Excluded. Balance. 3,50,000 insurable. What is fixed cost? Insurable. Total amount. 8,50,000. Correct? Now sales volume going to increase. Not sale price, sales volume going to increase by, so this amount also will increase. So 8,50,000 plus 20%, 10,20,000, correct? But I have to have another expenditure which I am going to incur, which also I want to insure. How much is the expenditure? 45,000, correct? What is that 45,000? To achieve this 10,20,000, I have to have an overdraft of 3 lakhs, for which I will be spending 15% interest. So 10,20,000 plus 45, 10,65,000. Everybody. So either based on sales approach. What is the sales? 32,50,000. What is the gross profit according to you? Which is nothing but net profit of 350 plus fixed cost. Correct? Now it is this way. So gross profit ratio. In our explanation, we have shown gross profit ratio. What is gross profit ratio? It is 8,50,000 divided by 32,50,000 into 100. What is the percentage? 26.15%. Everybody? Now listen carefully. Sales will increase by how much percentage? Sales will increase by how much percentage? 20%. So sales of previous year, how much is that? 32,50,000 increase at 20%. How much? The 20% ever 6,50,000. Everybody, projected sales. How much the projected sales? 39 lakhs. Projected sales will be 39 lakhs. Now it is this way, gross profit of future year 39 lakhs into 26.15 percentage. 10 lakh. To get accuracy, you can use 85 by 325. You will get 10 lakh 20,000. Correct? Because this 26.15 is an approximated percentage. Respond. What is this approximate percentage? I told you to get accuracy, you can use fraction. What is this percentage all about? 8,50,000 by 32,50,000, yeah. Which is 85 by 325, yeah. So apply that. 39 lakhs into 85 by 325. You get how much? 10,20,000 plus increase in expenditure. What is increase in expenditure? 45,000. So it is 10 lakh and 65,000. This is longest method. Correct? Respond. Alternatively, what you can do is that GP of current year, which is net profit, 4,20,000 minus 70,000. How much? 3,50,000. Fixed cost 5 lakhs. How much? 8,50,000. Increase at 20%, 1,70,000. Upon GP of future year 10,20,000. Increase in expenses, fixed cost 40. How do you get 45,000? 3 lakhs into 15%. You get 10 lakh 65,000 is what? Insurable amount. This is a shortcut. Are you following? So it is projecting the sales of future into GPR is what you are supposed to insure. Correct? Plus, if there is any increase in expenditure that is not covered by the GP automatically, that you have to separately insure. Correct? So those things only we are taking. Either you can just take up this way or you can take with the help of sales. Understood? Insurable amount, projected sales into gross profit ratio. Projected sales is the current year sales plus or minus increase. Gross profit ratio is nothing but net profit plus all the standing charges. It's not a question of insured standing because now only we are going to take insurance. So we are not telling how much is already insured. We are just giving there how much is insurable. So when we are advising, we will advise that you will insure all your standing charges. Correct? So net profit plus all the standing charges are to be insured. So that is what gross profit. Everybody? That will be expressed as a percentage of current year sales. We will get gross profit ratio. Project the sales of future, projected sales of future into gross profit ratio. You will be getting the amount to be insured if there was no other changes. But if the standing charges are increasing, then definitely even that amount also to be insured. Understood? That is the point we are just making through this computation. Clear? Alternatively, the gross profit which is identified separately, which will have direct relationship with the sales. So you can directly add to the extent of increase in sales to the extent of gross profit of current year. So you will get future gross profit as 10 lakh and 20,000, and then you will have increase in standing charges. Increase in expenses means standing charges 45,000, which is overdraft into the rate of interest. So the maximum to be insurable is 10 lakh and 65,000. The only place where you should not be confused is that net profit earned in last year 10% of turnover, and the same trend expected in subsequent year is not net profit ratio will be expected, it is a gross profit ratio. Please understand, increase in turnover will be 25%. Respond. Same trend will be there in future. The prices level remains the same and gross profit ratio will remain the same, not the net profit ratio. Understand? So net profit ratio can't be same. What is net profit ratio in a year will not have any relation with the next year's net profit ratio or any other year's net profit ratio and all, because net profit ratio is net profit is nothing but the gross profit minus standing charge which is fixed for all the years, correct? So thereby net profit earned in last year 10%, that is true. Same trend expected in subsequent year. Now the profit ratio remains the same, which is gross profit ratio remains the same. That is the only area that you should be knowing. It is not the next year also same net profit ratio will be remaining the same. So thereby what you should take up is, what is the gross profit, net profit of current year, 4,50,000 into 10%. How much? 45,000. Standing charges 90,000. So what is that amount? 1,35,000. Increase at 20%. 25, yeah, sorry. Please respond. 1,68,750 plus additional expenditure. Amount is given, no computation required. 31 lakhs. You can compute with sales also. You can do like this also. Sales now, what you should have done? 1,35,000 you should express as a percentage of 4,50,000. What is the percentage? 1,35,000 as a percentage of 4,50,000. What is the percentage? 30%. Then find out future sales. 4,50,000 increased by 25%. You will get, what is the sales? 5,62,500 into 30%. Will give you 1,68,750. Either way you can try. Very good. A loss of profit was taken for rupees 80,000. Fire occurred on 15th March 2013. Indemnity period 3 months. Indemnity period is 3 months. So which means it is from what date to what date? 15th March 2013 to 15th June 2013. 14th kuda sollaam. Nothing wrong. 15, 14, whatever be the case. Net profit of 2012, not 13, 12 was rupees 56,000 and insured standing charge amounted to rupees 49,600. Determine insurance claim from the following details: 10, 11, 12, 13, June, Jan to March, April to 30th June, July to September, October to December. That is first quarter, second quarter, third quarter, fourth quarter. Like that, full, total full. Then they have given sales from 16th March to 31st March 2012, 16 March to 31st March 2013, 16 June to 30th June 2012, 16 June to 30th June 2013 given. That's all. Super. Over. The question is determine insurance claim from the following details. Correct? No IWE and all. Everybody? We need to apply only 4 steps in this question. Correct? We need to find out only GP on short sales. But then we need to see whether average class applicable or not applicable, because policy amount given. Policy amount is how much? 80,000. Everybody? Pakka? Okay. So first, which means IW related area is not there, but otherwise all the remaining steps are there. Correct? First compensation period, it is 3 months. Over. So one step over. Correct? Step 2, finding short sales. So but trend, nothing is given. They are not given anything relating to. We should see whether trend related information given or not. Do we have any comparable period without fire? Yeah, naturally, because the fire came only in 2000. This 2010 no fire, 2011 no fire, 2012 no fire. Correct? And trend can't be based on period to period. Trend will be generally ascertained based on year to year. If year to year information not given, it is based on period to period. Understood? So can you take the full sales of 2010? Full. Can you take the 2010 full sales? How much? 4 lakh. Super. 2011. 4 lakh. 4 lakh 80,000. Okay. 5 lakh 28,000. Correct? Respond. What is the increase from 10 to 11 amount? What is the increase from 10 to 11 amount? 40? That 44,000 is an increase from 4 lakh 36. What is the percentage? 44,000 on 4 lakh 36,000. 10.09. 10.09 percentage. Correct? Sorry. Similarly, from 4 lakh 80 to 5 lakh 28. What is the amount of increase? 48,000. That 48,000 is increase from 4 lakh 80,000. So thereby you find how much is the percentage? 10%. So you find 10 to 11, 10.09. 11 to 12, 10%. Which means more or less we find how much? 10% increase in each year. Correct? And thereby trend will be concluded at 10%. Could you appreciate that? So when the trend information not given, we should see any comparable information for ascertaining trend. And normally trend should be ascertained not period to period but based on year to year. You are not there. So it is actually from year to year, and in 2010 the sales came to 4 lakh 36,000. In 2010 sale is 4 lakh. In 2011 the sale is 4 lakh. Increase from 4 lakh 36 to 4 lakh 80 70,000. From 4 lakh 36 to 4 lakh 80, the increase is 44,000. You have calculator also in front. I am telling some number, you are telling yes. I am eating lunch now. So 4 lakh 36 to 4 lakh 80, there is an increase of 40. That increase of 44,000, if you express as a percentage, it comes to 10.09 percentage. Correct? Then 4 lakh 80 to 5 lakh 28, you find it is. So you find consistently there is an increase of how much? 10%. Clear? And thereby you consider trend as how much? 10%. Is that clear? Trend computation over. After trend computation, go to the next concept, finding short sales. Correct? For short sales, sir, please stop talking. For short sales, I want 15th March 2012 to 15th June 2012, 14 or 15, whatever be the case. This is previous year, correct? Respond. Yes, minus, in fact, first trend will be applied. Respond. Yes, trend at what percent? 10%. I will get some sales. Then I will reduce sales, actual sales from 15th March 2013 to 15th June 2013. Correct? Compensation period is 3 months from 15th March to 15th June. 15th March 2012 to 15th June 2012 is previous year. Correct? Previous year plus or minus will give you expected sales of current period minus actual sales will give you what? Short sales. But how to find out these sales and all is the problem. Correct? Now listen. 15th March 2012 to 15th June 2012. Go to 2012. I find this is actually falling, this period if I see, it is actually last 15 days of first quarter. Last 15 days of and first 2.5 months of second quarter. Correct? Everybody? But how to split that means, it's very simple. Majority falling in first quarter or second quarter? So take second quarter sales, which is 1 lakh. Everybody. Now to this, I should reduce 15-day sales of June. I should reduce 15-day sales of June. Then I will get 2.5 months sales. Everybody. To that, I should add 15-day sales of March. Then I will get it correctly. Correct? For that purpose, separately, they have given sales. See the question. It is 16th March 2012 to, this is the sales to be added or deducted? This is the sales to be added. Correct? Then they have given 16th June to 30th June. This 6,000 to be, 2012. This is to be deducted. So out of 1 lakh, 28,000 is to be, 24,000 is to be. Then you will get the actual sales during that period. Plus trend, you will get expected sales. Minus actual sale in 2013. Respond. You will find out in the same way. This 40 plus minus, and you will be finding out the sales. Correct? Respond. You will get what? Short sales into GPR. Into GPR is very simple. What is net profit? What is insured standing charges? 56 plus 49,600. Quickly use calculator. 56 plus 49,600. 1,05,000 divided by that previous year sales. That year sales 5,28,000. 20% is correct. Short sales into GPR of 20%. You will get GP on short sales. Respond. Now there is no claim for IWE, no savings in insured standing charges. Directly going to compute whether average class applicable or father I want GP on AAT. I want GP on father I record AAT. Respond. AAT is nothing but sales from 15th March 2012 to 14th March 2013. By excusing information from this, by doing some magic from this, you should find out this year sales. Understood?
Thank you friends. Om Sai Bhojanapalli.